Welcome back, boys. It's Davey Trades here. We got another day of sexy trend following price action to go over. And we got a lesson of the day, right? So let's fucking jump into this thing. Let's see where I start. Where did I start? Well, we always start on the 1 hour chart, right? Because we want to see where we are. And lo and behold, we are still in the same place as we were before. We are in this stage 1 price accumulation, recumulation, stage 1, moving to the side. And what we want to see is some type of movement out of this to the top side where we can see some nice, where we can just follow this thing long. Or what we may possibly see as well is price start to come down to the downside, reaccumulate again further, and then eventually bring us up to the top side here. So my expectation for the NASDAQ is bullish. We just need to figure out the direction that the market wants to go in. And until then, we will simply show up every day and hope for some type of a clean moving market. The market is still open and we have a big drop to the downside. I was actually looking at this considering maybe a short here. But instead I decided that I would film a little video for you guys. That would have been sweet though if I caught that live to show you guys the power of the VCC, which is exactly what we're seeing here. We have our down move, we have our sideways move, we have our down move, right? We have our V, our C, which is our correction, our V is our volume, right? We have a direction, volume, correction, and continuation. That's the VCC method right there. That's all we look for, that's all we need. We need clean, clear, moving trend, which as you can see, we are chopping back and forth here, but we are getting that clean, clear, moving trend right now. But yeah, let's go over exactly what happened today. Starting off, I'm just going to look at what we had this morning for news. Okay, we had 530 unemployment claims and we had 645 flash manufacturing PMI, flash services PMI. So let's see. Let's start off at 530, which is here, I believe. Yep. We have this nice, beautiful, trending market during the London session, where we can see we have our C, our V, our C, and our C, and then another, this is our V, C, C, right? Continuations. And then we get that 530 news here, which starts bringing the market up to the top side. And that ends up being a larger VCC, right? So we get this nice push up. We got our V, we got our C, we have our correction, and then we have our continuation out of our stage 1, which is our correction, right? And we have a continuation here, and that's actually where I found this position, which is interesting because all we're looking for is the same thing on a fractal level within a larger VCC. So what do we have? We have our V, we have our C, and we have our C, right? I caught a really beautiful move out of here. I think I had a -1 a little bit early, a little bit early on into this correction here. And then on the re-enter, it was a beautiful move. I ended up moving my take profit even higher, and I got out kind of through the breakout of this little trouble spot. It didn't go too much higher, so that's good. I was super happy with this trade. You can see it on my YouTube shorts. And then there's nothing to do, right? We have a potential VCC here, right? We got our V, boom. We have our C. Not very much volume in this V here, especially since we have so much momentum coming to the top side here. Boom. But I did end up taking this trade here, which I got lucky. I did get lucky. I showed up to the chart just at the right time. I saw the position and I took it for our continuation to the downside. I was looking for a +2. It's 160 ticks here. And look, it was just one of those trades that worked out before it came up for a BE, which is always nice to see. Of course, I love it when trades work out like that. This is what I would consider a counter trend trade, but we don't really care because, well, we're just looking for smaller moves. That's really all we're looking for. Sorry guys, just getting rid of all this shit here. Yeah, we're just looking for smaller moves. So the lesson of the day is that I guess I want to talk to you guys about what happens to your stop loss when we have red news in the morning, right? So typically I would do 40 tick stop losses. Let's take a look at how the 40 tick stop loss looks today, right? We're looking at here. It's a bit tight. It's a bit tight. It's hard to find a position in there, even if we were going to the 1 second. Where's my... It's going to take a little bit to find. Where are ya? The 1 second chart is just so nuts. You know what? We're not going to look at the 1 second chart. It's taking too fucking long, and I don't care. Okay, so in futures, there's a common misconception that you're going to hear from a lot of people in the industry, and that is that futures has no spread. That is true, but it's not entirely true. There's spread. There is spread on futures because there has to be spread because there's entries coming into the market, and that's just how the market works. Brokers, it sometimes costs a lot more to put the entries into the market because of the volatility of the market. Like if we were to look back at yesterday's price action right at the very end of the day, which was this psychotic fucking move to the downside, let's see what a 40 tick stop loss looks like in this market. Hey yo, good luck. Good fucking luck getting that position. You have to be so... Your timing just has to be perfect. And I want you guys to think about exactly what we're doing here on a low time frame. Low time frames doesn't mean that we have endless opportunities and that you can get away with the smallest stop loss possible. That's just simply not true. Like your timing has to be like perfect because price action is price action is price action. It shows up across all time frames, right? Candles are just us looking at the market. It's just a way for us to see the market, right? It's orders coming in and out. And this type of stop loss, like if you look at how big the market actually is, right? Like let's take a look at the 4 hour, right? Like look at how big some of these candles are, right? Like this is a ton of movement happening in the market, right? So we go back to our 15 second, and now I gotta find yesterday again, which the market is moving, right? Like there's a ton of movement happening in the market. See, look at that. And for you to be able to catch a move right at the perfect moment with a tiny stop loss, right, during a really high volatility, really high volatile time, man, that's tough to do while maintaining proper risk management and having a a maximum loss as part of your risk management, which I do, which is 2 losses. You gotta be in the headspace where give yourself a fighting chance, right? Like look, 80 tick stop loss, right? That's a much more comfortable stop loss all the way down this bad boy, right? 2RR, right? You get chopped out if you took a move here. You get chopped out. You want to get to there. Yeah. So what you guys have to do is when you see that there is, how do I just skip forward? Yes. When you see that there is news that comes out pre-market, or that there's news that's happening a little bit after market open, you have to be aware that spread is real, and that it works differently in futures, and that it causes you to have to work with it. It causes you to have to change the type of contracts that you're using. That's why micro contracts are something that I suggest to traders. Even if you're trading on average 10 contracts, which is one mini contract, I still think that you should be using micros, because it gives you the flexibility. Even though, yes, they cost a little bit more, who cares? There's so little cost in futures already, it doesn't matter. It gives you the flexibility to change your contract size and size down when the market volatility is too high. You need to size down, otherwise you're just going to get loss after loss after loss, and then you might get lucky, and then whatever, you get like an okay trade, but it's not going to be worth the headache heading into it, especially if you design a strategy around something like that where you're trying to get away with a small stop loss. Believe me, I've tried it so many times, and it does work up to a certain point until the market conditions change. And I used to go for like plus 5R, plus 10R. Like, I've had moves that are plus 40R before, and it's like insane because I'm risking like $200 per trade. Like, with a stop loss, that's like your timing just has to be absolutely immaculate and perfect, and it's not sustainable long term, right? Especially if you are going for these higher RR returns. Typically, if your stop loss is too small, you're going to give yourself more of the opportunity to buy into the market or sell into the market, right? AKA taking on more risk, taking more trades, and then the market conditions are going to change, and you're just going to get chewed up, and you're going to go on some huge losing streak, and you're going to unravel, and you go blow your accounts, which is not what we want to do. We do not want to blow our accounts. We want to approach the market, and we want to give ourselves a fighting chance, and we want to keep our prop firm accounts, and we want to grow our personal accounts, and yeah, we just want to make things easy on ourselves, right? Trading's hard enough. Let's not make it more difficult. So what I recommend to you guys is not trying to catch that quick money, that high leverage trades that you see online all the time. Some of the best traders that I know, they are using micro contracts. They're using anywhere from, I don't know, 1 to like 5 micro contracts. And it's like boring. It's not as exciting, and you're going to have to hold your trades longer to get to the price that you want to. But honestly, like, that's how it should be, right? Like, there's actually no better feeling than like a trade that you have room to work with, and you get those nice volume candles to the downside or the top side, and you get that TP. It's a great feeling, right? It's boring, it's not as exciting, but the trade just feels cleaner, feels better. You feel like more of a professional because you're practicing good risk management. You're focused on giving yourself a good opportunity. You want to give yourself a little bit of room to breathe. That's good, right? You should be doing that. And that's something that I'm going to change in my own trading, because I was kind of getting more used to like a 40 tick stop loss when it was probably a little bit too tight for the past couple days. And yeah, I made some adjustments today, and look, I ended up having a really great day. I took a loss in here, right? A little bit early, like I mentioned earlier, and then I got a 2.5, and then I got a 2. Pretty great day. But yeah, that's the PA for the day. It wasn't great. we did have some nice opportunities, right? We did get our VCCs, V, C, C, V, C, oops, C. Let's see what else. Did we get some more? V, C, C, right? Oh, this is really choppy. Like, you don't want to look for your VCCs here, but V, C, C, I don't really like it. It's not that good. I didn't trade this area, and I wouldn't advise. Oh, fuck off! I wouldn't advise you guys trade in this area. And then this is nice. This is really, really nice, especially this position right here. This is fantastic. I really, really like this move. B, C, C. Right, volume, correction, continuation, VCC. Anyways, guys, I will see you tomorrow on the next one after the New York session ends. Cheers, guys.